Packed flights are expected this Thanksgiving season. Airlines have cut capacity, and there is a rebound in travel spending. Hunter Keay is an airline analyst at Stifel Nicolaus. His recommendations are among the most accurate in stocks like United, Continental, and Delta. He says holiday spending has always been an economic bellwether for the travel industry. Hunter joins us now from his firm in Baltimore. Hunter, welcome back to Bloomberg News. Always good to have you on.
Thanks for having me on. I appreciate it.
Hunter, what can travelers expect on Thanksgiving? How packed is it going to be on these planes?
Well, it's going to be crowded. Airlines have already actually sold out a large percentage of their flights at this point, and they're really holding the line on pricing. So if you haven't bought a ticket yet as a consumer, I would definitely advise that you do so now, because when we heard about 2 weeks ago, the last sort of temperature that we took, looked like the planes were going to be pretty full in the holiday season, especially on peak periods to very, very populous cities.
When you say that pricing is already being factored in, talk to me about what a typical round-trip domestic fare might be. How much difference from last year?
The fares could be up anywhere from in the neighborhood of 10 to 30%, depending on when you fly. Last year around this time, airlines really started lapping in some of these peak holiday surcharges, where they were charging a lot more in the base ticket fare. So it looked like a surcharge when in fact it was actually just a fare increase. That's going to be in there again this year around. So, you know, if you're going to be flying the day before Thanksgiving or the day after, or say 2 days before Christmas, you're going to be paying probably anywhere from 30 to 40% more than last year. And again, with crude oil up here to $87 a barrel, airlines still haven't sold a certain percentage of their tickets for travel in the holiday period around December. That's going to be reflected certainly in the base fares.
Hunter, I mentioned in the intro to this interview that usually holiday spending is an economic bellwether, especially for the travel industry. What are the numbers that you are seeing telling you about the economy, specifically as it relates to the airline sector?
Well, the funny thing is that there's a sort of this time is different theme going around right now in the context of investing in airlines, and there are some key differences as to why the airline industry is sort of behaving differently than the broader economy. Previously, over the last 30 years, airlines have really only worked in this investment during a boom economic cycle, but really, you know, the economy is not functioning that well, obviously relative to historical periods, and the airline industry is having one of the best years in its history. So capacity discipline is the key. Return on business travel is the key.
Okay, now there's, I guess, a difference between what some could consider a bubble period that happens during Thanksgiving and Christmas and through New Year's. But does that bubble for the airline industry, for the travel industry, does it burst after the first of the year?
Well, really, actually, November, December are really kind of shoulder periods for the airline. I think that's kind of a misperception. People think that November, December are very lucrative months for the airline industry. They're really not. It's only about a couple weeks within those 2 months that do very well. So November, December, January, February, March, really kind of a shoulder trough period for the industry. So it's not really kind of the bubble bursts into January, February anyway, because it's really already a depressed period to begin with. We've already moved past, actually, it's really more a function of when school is in session and when not. So after Labor Day, the travel has really come down a lot. It's going to be down here at these levels probably until, you know, April, May, when school gets back out of session again. Okay,
now we have seen business travel improving since 2009. Is this indicative of major, maybe a spike up in leisure travel as well? Are consumers willing now to open up their pocketbooks and their wallets to maybe take that vacation that they otherwise would not have given the economic conditions?
Yeah, that's clearly what we're seeing, some of that in some of the fare activity. Clearly, leisure travel volume was really never a problem. Even in 2009, which was one of the worst years in the history of this business, the leisure travel volumes were there. Airlines were just giving fares away. The business travel not showing up is what was particularly devastating. So when you had this return in business travel on still a relatively constrained capacity base, there's just fewer seats to sell to the leisure travelers, and airlines rely on them less and less and less. Yeah. And as you think about sort of the implementation of bag fees, other ancillary revenues, leisure travelers are pulling their weight a lot more than they used to in years past, and that's critically important. I mean, U.S. Airways in particular, the lion's share of every dollar they're going to make this year is going to come from ancillary revenues. So that's all leisure travelers. Very, very important segment this time around.
And speaking of ancillary revenues, let's talk about crude oil, because the prices of crude are going to have a lot to do with the prices of tickets, because that's going to be passed to the consumer. What can you tell us on that front?
Yeah, it's not a perfect balance. Obviously, airlines don't have the ability to pass through dollar for dollar. But certainly, obviously, this gets back to the theme of capacity control again. The fewer flights airlines have, the better ability they're going to have to pass through dollar for dollar an increase in crude oil prices. But you touched on a good subject about ancillary revenues. I see a couple benefits here for $90 crude. One of them being ancillary revenues. You mentioned sort of there's still a lot of flyers that have their bag fees waived because they have elite status or they have an American Express branded credit card or whatever. And international first bag, that still flies for free. Airlines actually implement those things. You can see bag fee revenues go up 70 to 100%. That's a boom. That would be an absolute windfall if the industry would far more than offset the higher increase in cost in crude oil.
Hunter, we have about 30 seconds left. Talk to us about your picks. Who do you like?
Well, our top pick right here is UAL Corporation, which is the merged United Continental. The valuation is really compelling. It's the cheapest stock we cover among the legacies. They have $9.1 billion in unrestricted cash. They're just waiting to deploy. They're going to delever the balance sheet. Very compelling stuff. I think that's going to attract a good, high-quality base of investors. Outside of UAL, which we have a $40 target price, after that, we'd probably pick Delta. That's our second best pick. But I don't think you can go wrong with any of the legacy carriers.
And Hunter, in about 10 seconds, clear skies for the airline industry going forward into next year?
Yeah, absolutely, into next year, no doubt about it. And we're going to be closely watching capacity moving into 2011. 2012, it's a bit murkier, but yeah, we're pretty optimistic for the next 6 months.
All right, Hunter Keay, Stifel Nicolaus, talking airlines with us. Hunter, thanks.